to a minimum while we're here. It'll make it go by a whole lot quicker for all of us. I would encourage you guys to take notes. If you guys want to get out some piece of paper, maybe a pen, if you guys want to set me up on a voice recorder that types everything I say, that's fine too. We'll give you guys some time to do that before we get going. But we're going to talk about a few things here. We're going to talk about overall just kind of the money we use to trade with. And I got kind of a little rule sheet we'll go over. We're going to talk about the difference between large versus small accounts. We're going to talk about how to manage your plays or how I manage my plays that I've found success. We're going to talk about how to pay ourselves, how to actually make trading somewhat successful, right? You don't make money until you actually withdraw the money, right? And then at the end, we'll probably go over all those questions and such. All right, so right off the bat, you guys know me. I'm Wax. I've been investing for nearly 5 years, buying shares and just holding them from my minimum wage job at the time, and eventually saved up, learning about the market years at a time. And then in about late 2017, early 2018, I decided to take the leap and start learning about options. And just like the Meet the Analyst tab says, it was a humble beginning. I had multiple blown accounts before I really started to realize what was happening. And I'll tell you the first thing that happened that we'll get into later that really clicked for me was stepping up my account size. And that'll be a big undertone about later. So I have created BullPrint, for your guys' education. And right now we're kind of just going to get into everything. If you guys have any questions for me real quick, anything, nothing? All right, cool. So
I got a quick question.
What's up, man?
Yo, would you want us to potentially just add you in the stock chat or whatever? This way I don't interrupt you?
No, I would rather you just be like, hey, and I'll let you know. I'll give you a real quick 1 moment, or I'll just answer right then and there. But I'm not going to be looking at the chat much. Okay, so let's get into it. All right, so the money we use to trade. So the biggest thing that... What's that? Okay. So the first thing I want to get into is the money we use to trade, right? The biggest thing that I feel like is a no-brainer that really sometimes isn't clear to everyone. You do not want to trade with money that you need, right? That should be the first thing, right? If you have rent to pay and you're using your last $2,000 to try and go gamble in the market, that's not good, right? The biggest thing is being as little attached to your money as possible, right? So I suggest starting any account with $2,000 to $5,000. We'll get into that a little bit later. But you should have genuinely between $3,000 to $5,000 of spare cash that you do not need for an emergency, rent, anything of the sort, right? It should be money that you can live without if you lose it all, especially if you are planning to start trading options, right? A lot of people blow accounts, and that's just part of learning. No matter the account size, everyone starts off new at some point, and you have to go through the learning phase. So it needs to be money that you do not care about, okay? A big challenge that I tell people often is, hey, if you start with 5K, do your best to double it, whether it takes a month, 6 months, double that, withdraw 5K, do it again. Therefore, you're only trading with profits. It fixes your mindset completely, and it changes the whole aspect of where your psychology is, okay? Now, a lot of the others, looking into, let's see, where do I want to go from here? Yeah, I wanted to mention, this is kind of going to be impromptu. I don't have, I've got a very, very slim note sheet in front of me. I'm going to just kind of be going just 100 miles an hour here. So the biggest thing about that, about money, we need to be trading with money we do not care about. Okay, so let's say you've got that 3 to 5K now. Okay, the reason why I like that 3 to 5K is that 3 to 5K gives you a little bit of wiggle room to follow all the rules that we're going to get into. Okay, and so getting into the rule sheet, right? I have a picture. I'll send it in real quick. But this is basically, I gotta go to Discord. So this rule sheet that I have had posted up behind my setup for a long time, probably 2-3 years now, is basically just a little rule sheet of general guidelines I follow to help me trade and stick to rules, right? These rules include you do not know what the market will do. Be prepared for the unexpected, right? The proper risk management is 1 to 3% of your account, okay? And the reason for that is the smaller your risk management, the smaller percentage of your account you're using. Okay, this picture is being sent in Stock Talk real quick. The reason why you want to keep your risk management the tiniest percent of your account as possible is because you are going to be so little attached to that money that it's going to be so easy to manage. You will be totally fine looking at it being down for a little bit. You will totally be fine letting it ride down to a stop loss before you need to cut it. You'll be much more prepared to let the play through for what the play is, rather than, I notice when someone is over leveraged in a play, these are the two things I notice. They either sell when nothing is wrong with the play, when they barely go red at all, or they're too scared to cut it when it's at their stop loss, right? They're too scared to accept the loss, and they let it become a way bigger loss than it needs to be, right? So that's a big reason why you should not care about the money you're trading with, right? And it might suck for a lot of us people with smaller accounts listening right now, but that's the reality of it, okay? And that also that small risk management, right? That 1 to 3% of your account that you're using per trade. Let's say you're using 10%. Okay, 10%. That's only 10 chances to be wrong, right? And that's if you keep adjusting that 10% every time you take a loss, right? If you're using 5%, that's 20 chances to be wrong in a row. Okay, you use 1 to 3%, you've got so many chances to be wrong in a row. It's not even funny. Okay. That's the biggest thing is losing streaks will happen no matter how good you are. Just last week I had talked about, I hadn't had a losing trade in like 5 days or whatever sent out. And then all of a sudden, boom, 3 losers in a row. It happens. It's going to happen to the best of us, and you're not going to escape losses once you grow up to be an amazing trader and consistent trader. It's just not going to happen. No one is 100%. Okay. That's why risk management is so important. You don't know when the loss is going to happen. You only entered the position because you were confident in the first place, right? So you thought it was going to be a winner. You're not expecting the losses when they come. Okay, so risk management is very, very important. I see a lot of people, over leveraging, using, and that's why 1,000%. I'm going to break this down for you. Right? A lot of people think, okay, I've got $1,000. That's a lot of money, right? Like, I'm not going to short $1,000 by any means. That is a good amount of cash, but it's just not enough to play options, right? How many of you guys have looked around the option chain and think, okay, these options are pretty expensive, right? Options are expensive, right? Or at least the good ones are. The good options should be expensive. It's kind of a little trick they play, but let's say you're trying to stick within your risk management. You have $1,000. Let's say you want to stick to 10%, which is still very, very hard to do. Okay, very hard to do. You got $100 to use. Okay, so I got to break down my play style first. We got to do play style. Okay, so my play style, we're going to be jumping all over the place, you guys. I'm so sorry. Okay, let's think. So, money we used to trade, the rule sheet. So I was going off of risk. Okay, so I'm trying to gather myself so this is actually like educational for you guys. If I'm just all over the place, it's not going to be. So, let's say you have $1,000 and you're trying to stay within some sort of risk management, right? In my opinion, it requires a little bit of luck to grow small accounts because you have to break every single rule I just listed, right? You have to go above and beyond any sort of risk management to play any decent contract, okay? You might find these cheap contracts, but I'm going to explain to you why in a little bit later on, why they're cheap, okay? Just because they're cheaper doesn't mean they're good. In fact, typically the more expensive contracts you play, the better they are, right? So going back to that risk, right? Let's say you have $1,000 and you're trying to stay within some sort of risk management. It requires a bit of luck because you have to break every single rule, right? If you have 10%, that's $100. Someone please point to me one $100 contract that is somewhat decent, right? That will move. It is liquid enough for you to play confidently, right? And then try and play multiple of those. Boom. Now you're going 10 to 20 to 30% of your risk management. Okay, so it's very, very difficult to play within your risk management if you have a small account. That's why I recommend the 3 to 5K, and it needs to be money that you do not care about. Okay, so I think we fully covered the money that we trade with. All right, now the rule sheet, if you guys haven't already taken a chance to look at it, it's very important to me. You'll notice every time you probably take a big loss, it's because you're breaking one of these rules. Okay, letting a play run through its stop loss is what you want to happen. Okay, you want to be proved wrong, right? The two things that I see people happening, right, like I was just talking about, they either don't let their play through, or they don't sell at the stop loss, right? Now that we've established the money that we're trading with, we're going to start to get into play styles, right? And we're going to get into large versus small accounts. I just covered small accounts. Now we're going to start talking about large accounts. This is how I play my plays, okay? So I'm a firm believer in starter positions, testing the waters, right? Before every play, here's what you're going to do. Before every play, you're going to go, here's my stop loss, here's my target, okay? And typically, you shouldn't pick any of those until after you've already charted up the chart. You should not be looking at a blank chart and trying to make a trade on it. It's not going to work if you're using technicals at least. So let's say you pick your chart, you go, okay, you got it all charted up, you got your levels, you got all of that important stuff. Now you're like, okay, I think this thing's going up, right? But you realize, okay, it has to break a certain spot. I'm getting ahead of myself. Missing certain things. Okay, so real quick, if I can just, I'm gonna post a survey real quick. No, I'm not. Jesus. All right, so we covered the risk management. We covered the money we trade with. Is there anything on the? So the biggest thing, no same days. A lot of stuff that's on that sheet. Really, just covering the last bit of that sheet is, that stick to the first stop loss, right? The biggest thing about trading is our psychology is set up to where we're so adept to basically holding on to a loser, right? It's so easy to hold on to a loser, right? And we're so eager to get out of winners, right? We're so easy to lock in profits. And the one, sorry, got a phone call. The one thing that's going to change your entire trading career is changing your psychology to be impatient with losers and be very patient with winners. All right. And so the play style that we're going to get into forces that mindset. Okay. Right. If you're consistently noticing that your losses are bigger than your profits, even if you're going 50-50 losses and wins, right? But your losses are bigger than your profits, you're picking poor stop losses. Okay. And it's okay to have stop losses hit. You're gonna lose. Like I mentioned, everyone's gonna lose every now and then, no matter how good you are. But you need to realize how to handle losses, okay? And part of that comes with, like we mentioned, having as little attachment to that money as possible. In fact, I have my fun, and I like to talk my shit midday about where the stocks are going and what's happening. But realistically, I am emotionally unattached because I've gone through times where I take a very big loss and I have to take 2 or 3 weeks off. It's that big, and those make you rethink everything. And you also have just as big wins, right? And those days are huge. Those days are monumental. Those days, I still suggest taking a day off. Everything needs to be about psychology and how you manage yourself, right? Just as you scale down a position, just as you have to readjust your position sizing as you blow an account, right? You need to readjust your position sizing as you grow an account, right? So getting into actually finding plays. All right, so this is the play style that I use, okay? And we're gonna get into the charts now. And let me know please someone interrupt, let me know if it is not very good quality.
Anyone want to take bets now? I'll go poor.
I got
$5.
bucks, shitty quality.
All right. Can you guys see?
Not yet, frankly.
All right, so we're going to use the Disney play today as an example. Okay. So Disney has a few things going on, right? We're just going to use my play as the example, right? So what happened with Disney last night? We know we've got a major support zone right there at 168 area. And then we've also got two major resistance spots, right? We've got this one, basically this whole zone we fought. This whole zone we fought yesterday was the two target spots on the Disney call out from voice. Okay, so essentially midday we notice, all right, we come down, right? We tested our opening price, couldn't do anything with it. We noticed there's a clear line in the sand right here, right? If I hover my cursor over right here, look at that. This is where we basically have rejected all day, 170.3. So I noticed, okay, we come down, we reject, boom. As soon as we bounce right here, I'm looking at this and I'm looking at this spot. I notice right here, right? I'm going to enter a call. So here's how this play position goes. I decide, all right, I think we're going up from here. Okay. So now, how am I going to enter this? Because I'm not confirmed right yet, because I haven't been proven right about my position, there's no reason I should be going full position size. And depending on full position size, right, full position size should just be that. For me, it's 2 to 3% of my account, right? So let's say that 2 to 3% of my account, it can be different for you guys. Let's say that's 3 contracts, or that could be 10 contracts. It's going to vary based on your risk management, right? So there, like I said, there's no reason why we should be full position sized if we haven't been proven right yet, okay? So I'm just going to mark it off real quick. Right here, this little line in the sand. No, not like that. Oh, no. Okay, so right here, this is where we're looking. So let's say first time out, it comes up this line, right after it rejects the first time, and we hold, I take an entry. You can go check. Oh, wait. It was a voice alert, so you couldn't see when we entered, but we got in right here, right? We got in right here, and boom, we have one starter contract. At least I did. I only had one contract to start because I was not confirmed right, and if anything, this was a very, very close to risk entry, right? This was not good. We were entering at the spot that it was likely to reject, so no reason to be going full position size, right? If it's going to reject anywhere, it's going to be right here, right? So we think because we've been consolidating tighter and tighter up to this range, right, we're probably going to try and look to push over, right? So we get on the bull side, and once we get that break, we can add to a winning position because we have been proven right about our hypothesis, right? So now we're in, boom, we add 2 more, we're in 3 contracts now, okay? So our first target, we had this 171 from yesterday, we get up there, boom, now we can sell 1 contract, okay? We sell 1, no matter what. At a first target, you sell something, you lock in something, no matter how good it looks, okay? So boom, one of my 3 contracts is sold, and I alerted this sell. I said, I'm locking in some profits here on Disney because it's at a resistive spot, and ES is, I'm looking at it right now. Trading Disney here at 171 looks good to break over, just locking something in with ES at a key resistance as well. That is exactly what the alert said at 10:06, right? So right here at that first target, sell 1. Immediately after selling it, I turn around and I set a stop loss or a limit order on my contracts for whatever I purchased them for. So no matter what, I have locked in profits. This cannot be a losing trade from here on out, okay? That's how you do it. And then from here, you can look away. You can look away. You can go to a different chart because your contracts are going to sell automatically if they get to the price that you paid for them, right? Now you let those runners run. I said, if Disney can hit 172 today, I will not be swinging but taking complete profits. 10 minutes later, boom, we hit that. I sell both my contracts and I'm out. Granted, looking back, hindsight, it's always 2020. I would have liked to have kept that third contract as the runner, right? That's, I should have. This was not our main target, but it was a target, and I said that was part of my plan, that I was going to be taking it here. So granted, I should have personally left that third contract, but let's say you did, right? You sell your second contract here, set it to automatically sell at whatever it was worth right here, right? So you get it? We're just leveling up. As we hit next target, we scale out of the position, right? So right down here, we entered 1, and then on the break, after we were proven right, we scaled in, right? We scaled into the play, right? So now we're full position size, we push up, we scale out at the first target, we lock in profits, okay? Now the next one, unfortunately, I had to scale fully out here, but you could have, let's say I played it exactly how I normally would have. We just leave one contract, we hold above this, it never even goes near where those contracts were worth, and we slowly carry on, and we have a trend line here that we would have hit, probably would have been our third and final target, right? Now let's say it didn't work. Now if stop loss was played, would have been a break under this pivot, right? Because that would have broken the uptrend we had created, and it would have also been a full reversal, but it would have been a real give up, as I say, right? So let's say it rejected right here. You've only got one contract that you're taking a loss on, right? Now, sometimes I do recommend, this is another part, if you're going to average down at all, it might as well be at your stop loss. Because think about it. Let's say you're stopping out right here. Okay, let's say it rejects. It gets to your stop loss. If you're going to get a contract, if you're going to get some more, why don't you get it up here if you're expecting it to go down some more, right? So you get your contract right here. If you end up stopping out, the only thing is if you do decide to average down at your stop loss, you have to stick to that stop loss, right? You have to. Because otherwise, you're basically just throwing money into a burning fire, right? So let's say you reject, you hit your stop loss, and boom, you're barely taking any loss on the contracts that you might have added right here, right? So on that rejection, you really only take the main loss on your first contract, and then from there, you really take a small, very small loss on whatever you added at whatever that stop loss would have been. So that's my play style, okay? And it's proven to be very consistent. And it's a very good way to pretty much turn a lot of trades around, right? So long as you can manage a play, it will give you the world of comfort. So long as you've already locked in profits, I swear to God, it feels like a weight lifting off your chest after you lock in profits and you set a stop loss at where you entered, right? And then your next level comes and you get to set a stop loss at a profitable contract level, right? So no matter what, you're just making money when your play works, right? And so it's about mindset. Let's think about if you only had one contract. Okay, for the people with smaller accounts, let's think about this. Let's say you enter right here, right? You get your one contract, all right? You play it, you get your break, you're all excited. Now, it gets up to first target, and I'm going to say this every single time. Every time you ask me, this goes for everyone in the chat. No one gets an exception. If you ever ask me, should I sell? I'm green on this. I don't know your targets. I don't know what you have charted up. I don't know what you were looking for. I don't know what you were planning. So if you are green and you will only have one contract, I'm going to tell you to sell every time. Now, without that being said, let's say you have one contract and you're actually planning a play, the same play. Now let's say we get that break over, right? It gets up to here. I say take profits, because if you only have one contract, here's what happens in your mind. You go, okay, what's going to happen here? We're either going to reject or we're going to break through, right? Now, if it breaks through, you feel like a genius, right? Then that's great. You get that little bump of, that little bump of dopamine, and it feels great. Now, if it rejects, what happens? You feel like an idiot because you didn't sell, right? So no matter what, hindsight's always 20/20, but it's always better to lock in profits when they're there. And when you have one contract, you don't always get the second opportunity to get that first price. So if you have one contract, let's say if this broke right here and I only had my one starter contract and I never got the chance to add to it on the break and it just hit, right? It'd be unfortunate, but I would have to force myself to sell out right here because I don't know if we were going to reject here or not, right? Go ahead. Yes. Let's. So that's a great thing to talk about, and this is a great example. When I say sell into strength, that's exactly what I mean, right? So let's take this PayPal chart, for example, and let's say you have one contract, okay? You have one contract that you swung overnight. Let's say it's a runner, so you don't even really care about it too much, right? You just had this play of the day, and now you're just swinging this runner. So let's say your target coming into the day is just flat 223, okay? The first time, let's say it just started, I don't know. Actually, yeah, this is a great example. So coming from all the way down here, especially with options, not with shares, obviously, they don't change value. They don't have IV impacts. But that contract, no matter what the date is, no matter what the date on that contract is, whether it's same days, same weeks, same years, they are going to act the same. If your contract goes up, it's going to be worth a lot more money the first time it hits 223 than the second, third, or fourth. Okay, and that's IV. That's because the implied volatility from this large of a move bumped up the price of those contracts. So if you have a target and you have one contract, that's why you sell the first time it hits it, right? This time you would have been rewarded because, it came back and hit your target again, right? Because think about it. You get to your target, you go, is it going to break or not? It doesn't. You feel like it can't be for a little bit, and then it comes back and you realize, my contracts still aren't worth as much as they were right here. Right, so it's the same spot, but your contracts are going to lose money just because of the volatility that died after this. Right, you see this early day volatility that just dies off like right here at the same time. Those contracts are going to be worth their intrinsic value, and they're going to be worth nothing that they were right here. Right, so that's a big thing about if you have one contract, or if you're just looking to sell it all. If you're looking to take any profits, just scaling out at all, it's very smart to sell the first time it hits your target right there. Right, that's why alerts are so awesome. Your alert goes off, go on, you sell it, you sell a contract without even looking at the chart. Boom, you scaled out, and now you set your stop loss. You're good. You can trade without even looking at your chart if you're that confident in your setups. If you use alerts and you use this strategy, okay. So that is my play strategy, okay, and that is how I approach every play with a starter contract, scaling in and scaling out. That goes for especially my swings. With my day trades, I've been finding that I have been very, very much kind of just using 1 or 2 or 3 starter contracts, and that's it for my day trades, as they've been kind of quicker lately. But for all my swings, scale in, scale out. Like right now, I have 2 bigger swings that I'm in. We've got Zoom puts, and I'm in AMD calls, both of which I have remaining runners in. We have already taken profits on those plays, and they're just running their course now, right? This PayPal swing I'm in right now, I fully intend to scale out of it, right? So that's pretty much that's the play style, and that's what's proven consistent to me. If you're going to take one thing, if you're going to write down one thing tonight, it's scaling in and scaling out of plays. Draw a little chart if you have to. That's what I'm going to recommend. So now I'm going to get off this and go back to my phone.
Okay, I probably sound way more clear now. Is this better? Okay, so now we're going to talk about how to pay ourselves, right? So that was pretty much scaling in and out with play management as well. Now we're going to get into how to pay ourselves and how to actually make money trading, okay? Now, the goal of trading is not to become rich overnight. If you haven't learned that already, you might be in the wrong place. I love trading to death, but I'm only 20, and even I have to acknowledge that the slow game is what's important, right? It's a marathon, not a sprint, okay? Now, I would love to have a $250,000 account and just try and go for the biggest baller trades ever, but that's uncomfortable for me. right? And so, like I was mentioning, you only make money trading if you pay yourself, which includes withdrawing money. Of course, to be profitable trading, you have to be profitable trading. So you have to get to that part before you can get to what we're talking about here. So let's say you've become profitable trading. I want you to find a good account size that works for you, right? Mine is between 10 and 15K. I've been scaling up and down. And that's just a comfortable amount that I like to trade with, right? I don't really, it's got a very comfortable risk management little loophole, right? I use about 800 to 1500 a play, and it's comfortable for me, right? And then on Fridays, right? Let's say I'm above that amount. And sorry, brother just poked in, distracted me. So 15K, right? Let's say on Friday I'm at 18,000.5, right? What we do is on Friday we're gonna cut out 3,500 and we're gonna put it in our long-term accounts. Now I've got 3 long-term accounts with all different purposes. Okay, this is personal choice. This is where it gets customizable. You don't have to do this exactly like I do. This is just my personal investment strategy. I've got one long-term account. It's just filled with a bunch of blue chips and strong stuff that I like for the long term, that I don't even touch. I only add to, right? And that's the biggest account. And that one's awesome. Love it to death. We only put money in it. I don't think I've ever taken money out. And then we've got a dividend account. This one's a little bit more fun because you try to primarily focus on only dividends. It's a little bit smaller, but it's still got a fun function. Fat, you're mute, please.
I'm sorry, bro.
It's a little bit more fun, and it's a drip account, so it's dividend reinvestment, and that's a little bit smaller. And then we've got what I call a challenge account, which I started just trading shares, so it's not really much of an investment account so much as just kind of trading shares rather than options. So I've got 3 long-term accounts, and then I've got my trading account. So on Friday, let's say I'm up at up to 18.5 or whatever. I take out that difference, which happens to be 3,500, and I split it between those 3, depending on whichever one needs it, or those 2, whichever one needs it. I don't add money to the challenge account. That's why it's a challenge account. But the 2 larger accounts, the drip account and the longer term account, every Friday, no matter what, if I'm up at all, even if I'm up $50, if I'm up $10,000, doesn't matter. We subtract the difference and we divvy it up between those 2 larger accounts. And that's how I pay myself. Every now and then, it's fine to pay yourself if you want to pay, 90% of your week's earnings to those 2 accounts, and then maybe pay yourself 10% if you want to give yourself 50% and then only save the other 50. It's totally fine. How you choose to invest your money is whatever, but that is how I pay myself. I keep a small trading account that I'm comfortable with, and I pay myself on the week to make sure it's reoccurring, right? Because no matter what, those long-term accounts, I don't care if the market crashes tomorrow. I'm fucking 20. I've got 30, 40 years until I plan on touching that money. All I'm going to do is add to it. So for right now, that's my bank account. Like, my investment accounts are my bank accounts, essentially. So for me, it might be a little bit different, but that's how you pay yourself. It needs to be consistent. You need to be taking money out of your account when you see profit and putting it somewhere where it needs to go. Okay. So long as the money is in your account, we might think, oh, we closed the positions, I'm green. So long as it's in your trading account, it can still be traded with and lost, right? And personally, I know a lot of you guys are just now starting to get into shares and using your profits to buy shares, and that's great. I encourage it. Please open up a separate account. You need to have your money separate. You're going to want to track everything you do. Oh, that's another great thing I'm going to get into. So, yes. Yeah. So, everything aside, I do have a bank account dedicated for tax purposes, and I allocate 20%. And then at the end of the year, I usually I've got a little bit of a pillow left, right? So always allocate more than you think you'll need. And that you'll always end up on top, feeling with a good mindset going going into tax season if that's what you're doing. Give yourself a pillow. And then at the end of the year, it'll feel like you're getting a little bit of a bonus. You're like, oh, I've got extra money from taxes, right? But what was I talking about right before that? Tracking your trades, right? So it's very important that you have a separate trading account from your long-term account. Now, it's totally fine if you want to have your own IRA. It doesn't matter if you're starting it with $500, $1,000, 10,000, 100,000, whatever. You need to be able to track them separately and have them grow independently, okay? And every day for my trading account, I keep track of everything. I keep track of the main trade I took that day, my favorite play, and my worst play. If I have a worst play of the day. Typically, I just do my favorite. Sometimes my favorite happens to be the loss of the day or whatever. But I like to track everything. And you'll start to notice, right, some of the things that I track in my trading account are starting balance, daily ending balance. Of course, comes PL, whether you were profitable and how much you lost for the day total. Commissions are typically included with that. I don't really discriminate between commissions and PL. Really just the daily change, and then how much I gained on the week, how much how much I made in the week, and over time, what this is going to do is it's going to create a catalog for your growth, right? And so now that I've been doing this for over a year and a half, I can go back and I can go, okay, what was the best month I had? What month did I make the most money? Or what was the best day I ever had? What was the best day I ever? What was the worst day I ever had? What's the I don't know, what months out of the year do I do better on? Did I have a slump, right? And over time, you're going to develop a track record for yourself, and it's awesome. It's so great because you're really going to start to notice your growth, and you're going to start to notice mistakes a lot quicker. It's really going to help you guys. And for my long-term account, it's a lot easier. I really just only update the weekly change, and then if I add any money to them, I have to know how much total I've put in, right? Because you want to know how much money you've put into the account so you can actually tell how much you've made, right? If you lose track of how much you've put in the account, then I'm pretty sure that whatever brokerage you're on will have that information for you, but I like to keep it tracked myself. Any input I take, or any input or output I take, and then I also have the weekly change, whether it's a gain or loss, and then of course the value as it changes per week. And then again, that's just to track your progress. That's over time, it's just going to track how you do. And I think it's a great thing that all traders should do, especially starting out. It will expedite the learning process exponentially. Okay, I very much encourage it. So I know I probably missed a ton of stuff, and that's why we're going to go to questions. But I've covered everything on my little note sheet here. We went over the money we used to trade and how we need to be as little attached as possible. We went over the rule sheet, which is basically how we enter trades, what money we use to trade with, right? No same days, we know that. I'm a hypocrite, but no same days.
Do you want me to make that into a graphic so it's not a picture of a piece of paper, bro?
Yeah, dude, go ahead. That'd be awesome.
Bro, yeah.
We went over the scale in and scale out method, my play style, which I should be charging a fortune for, but y'all get it for free. Play management that kind of fits in the same thing, and then how, of course, we pay ourselves, how we make trading profitable to us, right? And I'm going to tell you right now, if you decide, I want to take my money out, withdraw it every month, it's going to be hard because that month you're gonna have roller coasters. I've noticed on Fridays is when I'm up the most, I can pull the most out, right? And the more I get to pull out, the more I get to put in my trading account, the more I make for the week, essentially, right? So I'm gonna switch gears over here. Let's get on into questions. What's everyone? Where's everyone's mind at? What's everyone thinking about? Speak up. I know someone's got more questions.
What about addressing the issue of buying more expensive contracts, like maybe Amazon or
Wait. What?
Going over your like buying more expensive contract positions, like even though it might be
going over why more expensive contracts are better.
no, like why, like how to buy more expensive contracts, even though it might be a little bit over 3%. Is that okay? Or
That's the thing is, for your case, right? You're talking about your Amazon leaps, right?
yeah, because those are like 7 Gs for some of them, like out in January.
Those if leaps, I would take that a little bit differently. I would treat those as an investment. For example, whenever I take a leap, it's in my long-term accounts. Like my Apple leaps are in my challenge account.
Leaps. I love
Yeah. So
what would you call a leap? Like, what would you say?
I would treat it more
Like a month?
honestly. If I'm going to be honest, I think leaps are more of an investment rather than a trade. And like I've discussed before, there is a fine difference between trading and investing. Investing is a cheat code if you really just take advantage of other people's psychology, which is literally just buy the dip. Please. Here's my long-term strategy, guys. Find a company you think can stand the test of time and buy the dip. That's it. That's it. And then just close your eyes for like 3 days until it's green. It's like shares are a cheat code. They don't expire. You don't have to sell them at all. You shouldn't sell shares at all unless the company declares bankruptcy or it's just a dying industry. But realistically, the shares are a cheat code. But trading requires, trading options is a whole different game. There's theta, there's delta, time decay is theta. There's there's implied volatility. There's all this fun stuff that just make options either hell or heaven, right? So again, I would treat leaps as more of an investment, meaning you wait for a low volatility time period, right? You wait for a drop, you wait for a base, and then you take advantage of that low IV, and then you get it in your long account because you're going to treat it as an investment, right? And like I said, the reason why is because it's a leap. You're not trading it. You're going to ignore it for a year or so. So if anything, you don't want it to be in your trading account affecting your daily gains every single day. You know what I mean? Like my leap made a fucking, my Apple leap did really good today, but it did fucking, I didn't trade it. I didn't manage it at all. And if anything, I consider it completely separate from my trading account, right? So I would consider, if you want to go a little bit heavier than your account, yeah, just imagine you're just devoting 7% of your account, or is that what I think that's what you're going to say, to Amazon. You know what I mean? That's a big allocation, but again, if you need to go more than 10% of your account to take it, I just probably wouldn't at that point. But yeah, I would treat leaps as an investment rather than a trade. Because you do plan on holding it for a while, and you are holding it because you believe in the company, right? Long term. It's just a highly risky form of investing rather than owning shares. That's a really good question, though. We got any more? I know we got some more. I know I missed a ton of stuff to you guys.
Yeah, I have a question.
What's up, man?
So when I usually come on here, you guys have a whole bunch of trades already posted, and I'm curious how you go about like finding companies and just your overall process from start to finish.
So I do have I have a volume scanner that I like to use. Right, we know volume is the biggest, in my opinion, is one of the biggest things I use to trade. If you want to find that exact volume scanner query, it's in my channel in Waxu Alerts. If you just check the pinned messages in my channel, that's my scan query. And basically at nighttime, I'm in California, so it's a little unfortunate. But yeah, I'm just not willing to wake up early. I personally think that the morning pre-market is the best time to look for plays. But like I said, I can't get up that early. I'm still a student. I do a bunch of other shit, so this is not going to work. But I go through my scan query at night, and it's actually at night it works better because Thinkorswim updates overnight. And it changes to like whatever the highest volume is for the pre-market. So when I see it at night, I get to see everything that basically had a big move today, right? So it happened today at nighttime. That's when I get to see the volume that came in, the highest average volume daily breakout or whatever I'm looking for. And then I basically have to be enticed by daily chart, because a lot of my plays specifically, this is only specific to me. Again, this is getting nitty gritty into play styles. You'll probably find excess looks for plays differently than Chris does and I do. So I pretty much just look through my volume scanner, and then if the daily chart looks good, I'll chart it up, and then if I can find some sort of play in it, that's pretty much it. It's not really anything crazy. I mean, I would suggest though, spend a lot of time charting. And you're going to find a lot of the times that you're going to chart an entire chart up and realize, oh, there's no play here. And that's totally fine. You don't have to force anything. Don't think because you spent 30 minutes charting it up that you have to find a play on it. It just might not be set up for one. And that's totally fine. Even though every stock is going to move, it doesn't mean it's going to make that move with confidence, right? The only plays that I alert is something that I think is going to move confidently. I think this is a move that will happen, right? Just because you can maybe decipher the chop on a certain stock doesn't mean that you should play it, right? So if anything, don't be bummed out that you spend a bunch of time charting something and you can't find a play there. Don't force it. Don't try to find something that's not there. And if I'm going to be honest, I play a lot of patterns. I'm totally comfortable playing. I play a lot of wedges. I play a lot of pendants. Play a lot of just triangles and really just flags, like simple stuff, just on bigger time frames. And essentially, I just have the patience to let them play out. The biggest thing is I'm a pattern trader. I trade patterns. I play volume. I play breakouts, and those all come just from patterns. I use news catalysts sometimes, like with the vaccine. That was kind of my theory going into the Zoom shorts. I just tried to be a little bit earlier on them. Some stuff I like to have news catalysts because obviously sentiment matters, right? You following the general trend of whatever you're playing is going to help you a million times. You don't want to be the guy trying to think outside the box. Like, that's not what trading about. If anything, you want to know where the crowd's going. You want to know what the crowd is buying, right? So, you don't want to be the guy thinking outside the box. That's a big thing. But when looking for trades, really, I just look for my patterns, right? If something looks good, I'll chart it up. I'll give it the time of day to spend some time looking at it. But you really don't want to force anything. If you do happen to like pattern trading, if you're into price action, which is if you want to learn how to trade like I do, literally just look up, do all the analysis you can on price action, okay? Price action is the term that we use. There's technical analysis, and that's just a very broad umbrella term for basically just looking at the chart to trade, right? There's a ton of technical analysis. There's, Fibonacci trading. There's, Elliott waves. There's all that sort of fun stuff that's unrelative to price action specifically. My type of trading is price action. I focus very much specifically on what the chart is doing, where are we bouncing, what do the patterns look like? How's volume looking? Like that's what falls under, price action, right? I'm looking at how the chart is moving rather than, where it has moved, if that makes sense. How Elliott waves and fib levels are used. I use some fibs, but essentially that's what I mean when I say my motto is, let's play the chart as it's presented, right? We're focused on what's happening now, and we're trying to base a future outlook on what's happening now, right? We might think this is happening, but we can't be sure of that until we're proven right? And that goes back to just the starter contract thing and all that. But again, this all just kind of gets nitty gritty into play style. A lot of other people they like to go all in right at their one spot. They keep it super tight stop and they don't believe in starter contracts, and then they just scalp like seconds later. There's a ton of different play styles. Technical analysis is not one set rule. There are millions of ways to be successful trading. There's not one set rule of ways to trade. I personally believe that price action is the holy grail of trading, and you really don't need to look any farther. But there are other people that beg to differ, and their charts look like a fucking coloring board, So that's on them. But it's all style. It's all about what's comfortable. A lot of people in here, they're really comfortable with scalps, and they'll just spend all day just scalping, spending all their money on commissions, right? And then other people like me, we like to be patient. We're fine looking at red for a little bit to have it maybe pay out the next day or so, right? And that's totally fine. Other people, they just like their leaps. They just get a good buy and then they just sit on it for a couple months because they're, so far in the money that they are just making money off of pure delta, right? So, so many different styles. You really just need to find what's comfortable for you. But no matter what, they all have in common is risk management and how they pay themselves, right? That's it. That's the only thing that every trader has in common. So I know I went on a tangent there, but I think I covered some good stuff. So we can move on to the next question.
Hey, well, actually, somebody asked a question before about how to like locate stocks that you might want to trade the next day. In the Option Talk channel, I dropped 2 links. One is to an after hours screener by MarketWatch, and the other is just the general tools page by MarketWatch. Really suggest checking it out. They have a great wealth of tools for after hours pre-market, ER related stuff, news, IPOs, stuff like that. It's a great resource.
Awesome, man. Appreciate it. So yeah, next, does anyone have any other questions? Feel free to speak up. You don't have to.
I'll ask a question. What is your ideal setup, or what's the most successful trading style? And you kind of hinted already at price action, but like, what would you say is your ideal setup that has been the most successful for you?
Oh, dude, I love it. Anything at all-time highs, my man. If you give me something at all-time highs and it isn't like the first day it's hit all-time highs, like look at PayPal. PayPal, we're going to get a continued breakout tomorrow, and it's going to be awesome. Like, I love just continuation plays, right? Something goes up, it hits a high, it pulls back a little bit, it builds the base, builds some support, and then you just get the second-hand rip up. Those are the easiest things to read, in my opinion. Other than that, I love my wedges. I love my wedges. Wedges, to me, I see them the clearest. Those are the patterns that I just will spot the fastest. That I'm like, all right, this thing is wedging. And wedges are easy to see. You want to know why? Because we're looking at one right here on PayPal, right? All it is when you're getting lower highs and higher lows at the exact same time, right? That's all it is. That's the only criteria. It's just price consolidating into a finer and tighter point. That's all a wedge is. And guaranteed 95% of the time, you will get some sort of large movement resulting from it. It might always be fast, but you will get a large movement, whether to the top or the bottom of that starting wedge. I love my wedges. Wedges are the most comfortable thing I look for. And then anything, I do a lot of, like, I guess you could call it momentum since it's at all-time highs, but that's not what momentum trading is. But I really like those sort of setups. Everything bullish, right? This is BullPrint. I have a bull bias, right? That's something you guys need to know about me. I don't alert very many puts. I naturally look at a chart and think of the first possibility of upside. And if it's not there, I typically move on. I'm just not comfortable as I am shorting, as I am going long. Now, given I can still give you a pretty nice short play, and I can still spot out nice plays, it's just I need a much better setup to be comfortable alerting short than I can for long. In my opinion, it's better to have a bull bias than a bear bias. If you're going to have a bias at all, again, you don't want one. It's not healthy, because a lot of the times what happens to me is I'll be in a trade. It'll be nowhere near my stop loss, but I will be proven wrong somehow. Market will be rejecting or something, and I'll average into it or something. And it's like, it's not the worst thing in the world, but it's just sometimes, it's hard to get over like a bias once you're convinced in a play. And that's, that goes right back to just first stop loss, right? As soon as you're proven wrong, exit. But my bull bias, back to that. When I look at a chart, the first thing I look for is potential upside. And if it's not there, most of the time I'll move on. So this is BullPrint, like I was saying. All of my plays, I look for upside. What was I saying right before that led into it? I'm so sorry. Oh yeah. So I like to play things that have, they're bullish. Everything that's doing very well in the market, right? That's kind of the stuff I look for, and that just goes back for me looking for stuff like pretty much near all-time highs.
That's perfect, man.
Sweet. Got time for a few more questions. Just shout them out, you guys.
Hey, yo, what's your advice on swing trading?
On swing trading, I love it. I love it. Swing trading is where the money's at. If you have the patience and the wherewithal, but if you have the patience and the composure to be able to handle looking at a down position and know that you're playing something bigger, you're gonna be very what's up? You're gonna be well off, is what I'm trying to say. Swing trading, in my opinion, is far superior because think about this: every chart moves the same. You look at your daily charts, you find your daily bull flag, or you find your little 5-minute bull flag, you find your 30-minute wedge, whatever. Every chart moves the same. A daily chart moves the exact same as an intraday chart. If you can find the same setup pattern as you can on an intraday chart on a daily, you can play it. You just have to have the patience. They will play out the same. I swear to God. If you find a wedge on the daily, it will play out just like a wedge would on an intraday time frame. You just have to have the patience to let it play out, right? That's it. So yeah, I love swing trading, right? But a lot of the time, people get clouded with that one down day, and they're like, oh, I got to get out, right? And it's like, no, take a look at your bigger time frame, compose yourself, think about where you're at, think about what you're looking for in the play, and have you been proven wrong yet? That's it, right? That was a really good question. That was a really good question because I really wanted to make that point about how charts move the same. That's a really good question. I love swings. I think swings are the superior form of trading, in my opinion. Next one. Who wants the next one? Take advantage of it, you guys. Free education. Either way, regardless, you guys, I'm seeing a lot of new faces in here, and even if I'm not seeing new faces, a lot of you guys are coming back, and that really makes me happy to see you guys. It really motivates me to see that you guys are putting in the same effort to learn as I am to teach. Okay, it really makes me want to continue this and keep it up. So, if no one has any more questions, I think it's okay to call it here. I'm gonna leave very slowly so anyone can ask another question if they need. But it's about 6:00, and I think we're good to wrap it up. If no one has any questions, no one's got anything.
He's begging for questions, guys.
I'm just seeing. I just know I'm gonna get like a message later about like, well, what do you do about this? And I'm like, okay.
I mean, you did just spit knowledge for an hour, so.
Yeah. Okay. How about this? Who took notes?
I did.
Yes, sir. Yes, sir. Let's go. Okay. Yeah, I don't care if it was one person or 50 people. I'm glad. Love to hear you guys.
It means anything. I'm working on the graphics, so I have to read your shitty
the whole
notes.
thing.
Huh?
I recorded like the whole entire thing.
Really?
Yeah.
That's awesome, man. Hell yeah, man. That's awesome. Alright, you guys. So I'm gonna bounce out here. If you recorded the whole thing, if you want, my man, that would be 100% amazing if you could download that to YouTube and then post the link in here. Or upload that to YouTube. That would be incredible. Or just upload it wherever you can.
Got you.
Just let me know when you got that, and I will gladly pin that somewhere. But you guys, that's gonna conclude the session. Thanks for everyone showing up. I hope you guys got something out of it. I'm gonna head out here, so you guys have a great rest of the night. Okay? Yeah, of course, you guys.
Thanks,
Appreciate it, bro.
Yep. Look forward to a killer day tomorrow, you guys.
Have a great night.
See you tomorrow.
Yes, sir. Let's kill it tomorrow.